Hi, this is Dave Myers at Paper Trail Financial. Early payment discounts can be an effective way of improving the speed of collecting on open accounts. But there are some issues when using the Discount tab in QuickBooks. Because discounts don't use items, sales tax, job costing, and sales reports are not modified when a discount is used in the Receive Payments window. And although early payment discounts can speed up receivable turnaround, business owners need to be aware of the cost involved. First, I'll show how to set up and use payment discounts. We'll start by reviewing two lists. The terms list allows us to create or change payment terms. In this case, we'll use a 2% discount for payments within 10 days, net of 30 days. The second list to review is the customer message list. In this case, I'll add a new message that can be included on the invoice to inform the customer of the discount for early payment. Any of the active payment terms can be used on an invoice, but we can set a default term for a customer. In this case, we'll assign 210 net 30 to a customer. To use the discount payment term, I'll create an invoice for this customer and date it a couple of days ago. You can see that when I enter the customer's name, the discounted term auto-populates to the invoice. I'll add the new customer message to the invoice so the customer knows about the discount. Now let's assume payment is received 2 days later from the customer. When I enter the customer name, QuickBooks displays a message that states the customer has discounts available. When I click the Discounts and Credit button, the payment term is displayed and the 2% discount of $6.45 is calculated. Once the discount is applied, it is listed in the payment table. For this example, we'll assume the discount was already subtracted from the payment. As I mentioned earlier, the Discount tab doesn't use items, which adversely affects reports. I'll open the invoice for the transaction I just created. You can see that the invoice included $22.50 in sales tax. I'll also open the sales tax liability report and date it the same day the payment was received. When I drill down on the customer, we can see the sales tax owed amount of $22.50 is unchanged after the discount was used. If sales tax is being charged or job costing is involved, the best way to use discounts is through a credit memo. The original customer and items are used. The amount is calculated to be the original amount multiplied by the discount, in this case 2%. You can see at the bottom of the memo that the sales tax has been calculated as a separate value in the discount. There are financial considerations when offering payment discounts. A 210 net 30 term is offering 2% in order to receive payments 20 days early. Annually, this amounts to over 36% a year. For a business that sells products with any underlying cost, offering a payment discount may squeeze margins too tightly. A service-based business may be able to absorb the cost of the discount, but still needs to be careful that the benefits of faster receivable turnover exceeds the costs.